As an investor, wouldn't you like to know when you're going to get your return on your initial investment? So it's an obvious question. When you ask it, the person selling you the program is going to give you a speculative analysis based on today's oil production. Well, they're going to type it into a calculator, but why not have all the formulas laid out for you? So, in this particular investment, it's a $4 million program. This is an example based on a program that I have seen in the past. So, if you take the time that it takes to retrieve 100,000 barrels of oil, it calculates that it will be recovered in about a little over 4 years' time. So this is speculative. It's based on what I know from the input that you put in. So if you're investing $400,000 for one unit, then it will account for what that position size is, how much money you're going to get back. Let's go ahead and add in some more funds. We're going to go with 800,000 this time. Feeling a little bit better about oil price, so I'm going to go with 125 and then 100 barrels a day. So that's daily production right there. Gas price, we're just going to increase the MCF that we're getting off $2.46. So we'll see what happens there. After we do that, we're going to go look at the results. It looks like 800,000. You'll get 212% ROI paid back in 2022 of August. So that's just because we went from producing 55 barrels a day to 100 a day. Well, that's definitely going to get you paid back a lot sooner. So depending on the output of your well, this calculator will evaluate that and whether or not it could be a good investment for you. You can add in operating costs. It'll subtract that. I didn't account for the oil sales tax or the NRI, working interest, the royalty owners, or the land acquisition. So all those can be added into the formula to get a little bit more on target. I figured this is good for now, just as an example of what you can do with a simple formula and combining them together. Predicting oil and gas is just unknown. There are many factors. This example shows if it were producing 365 days a year, which we all know there's maintenance time, there's downtime. So as far as factoring in those percentages, that can be done. If your well's going to produce 60%, if your uptime on your well 60% of the year, 75% of the year, we can add that in as a factor, so it's not producing every day. Some wells do produce every day, so I added that in because I didn't want to have any limits. But take a look at it. Let me know what you think.